my name is Antonio Mele. I'm full professor of finance at Università della Svizzera Italiana and senior chair with the Swiss Finance Institute. And today I'm going to talk about financial market volatility and economic policy at the time of the outbreak of COVID-19. Market volatility actually has never been as high as during the outbreak of COVID-19. On March 16, the VIX index, which is an index known also as the FAIR index, hit its record high of more than 82 percentage points. Market data such as the futures prices on VIX show that investors' concerns about the economic effect of coronavirus were even more acute and likely to persist more than during the 07-09 global financial crisis. There are many reasons underlining these developments, but it is worth to mention a few of them. So at the time, I believe that market evaluations were probably already very, very, very high. For example, the market was already complacent about the fact that the Federal Reserve would continue to pursue a policy with ultra low interest rates. At the time, the only thing that would make you change your mind about market evaluations might have been the occurrence of a Black Swan event. And COVID-19 was such an event. Its economic effects were devastating since the beginning, with job losses that would reach levels not seen since the Great Depression of the 30s of the last century. And the market turmoil is always very worrying to us. Suppose to consider the following situation. When market volatility is very high, investors sell. But when investors sell, market volatility raises further. This feedback loop certainly contributed to the complicated market dynamics that you observed during this period. And this feedback loop certainly is very worrying because consider that if during this development some important financial institution had to incur into a big loss, you would have witnessed to market dysfunctionalities that would be reminiscent of the 07-09 global financial crisis. For example, a credit crunch with adverse consequences on already seriously compromised real economy. So it is very reassuring that today market volatility is much, much lower. At least, so it seems today, such additional spillovers will not happen. And uncertainty in financial markets and the economic activity is actually much lower than it used to be 2 months ago. Why? Economic policy around the world has certainly contributed to mitigate such uncertainty. Policymakers seem to have learned the lessons from the global financial crisis and the European debt crisis, injecting thousands of billions of dollars into the economy throughout dedicated policy plans. Some of these plans were truly unprecedented. And certainly, humanity had to face several extremely challenging moments in the last 10 or 15 years. The global financial crisis, European debt crisis, migration problems, climate change problems, and now pandemic problem. It is likely that today we will learn from these history lessons and react to the current developments with coherent policy plans. The fact that Europe is trying to come up with a common policy throughout a variety of different projects shouldn't be very surprising. If Europe is a political project, it is very normal that its resolution will reflect complex mediation mechanisms. We should conclude and try to think positively. However, we need to think about the economic problems that we are about to experience soon. COVID-19 will leave humanity with a big debt burden. We shouldn't worry too much about countries where public debt was relatively low before this crisis, such as, for example, Switzerland. We shouldn't worry about other countries, such as the United States. However, we would have to worry about some European countries where public debt was already very high before the pandemic. This debt will have to be borne by future generations. And the more an economic system is oppressed with debt, the higher the efforts needed to be at the same level as countries with lower debt. From now on, then, economic developments and reconstruction will have to go hand in hand with financial stability. Therefore, let's raise debt now, because we have no choice now, really. But let's be prepared to manage its implication in the medium and long term. Thank you.